Real estate is about freedom, choice freedom, time freedom, and money freedom, and the impact you can make with that freedom. But it doesn't come without cost. Your freedom takes work. That's why Neil Timmins brings together the tools you need to build your real estate legacy, from tips and tricks to interviews with industry titans. It's all here in one place. Real Grit. Let's get to it.
What if I told you you can make 20 times the return of a single family fix and flip on your next big deal? Well, it's actually possible. It's possible inside the world of commercial real estate. Say, I'm inviting you to this free challenge. It starts August 15th. It's totally free. It's a 5-day challenge where I'm going to take you and deep dive into the world of commercial real estate, more specifically, capital multiplier properties, what that is, how we identify them. I'm going to show you how to identify them, how to evaluate them, and how to lock them up risk-free. I'm going to give you all the paperwork to do it. It's totally free. You can sign up to join us at www.20xprofitchallenge.com/real grit. That's www.20xprofitchallenge.com/real grit. And I'll see you in the challenge. Hey, everybody, welcome to Real Grit. I've got Tim Milazzo here with me. He's a co-founder and CEO of StackSource. He identified a market opportunity for a tech-enabled commercial real estate financing platform. He recruited Nathan as his co-founder, and together they built the company. Prior to StackSource, Tim worked for tech giants like Facebook and Google, where he helped expand their B2B marketplaces in ad tech. Now, years ago, he interned for a top New York City real estate company before the current real estate tech wave that he's on. He comes from a family history of being in real estate. So I'm excited to have him here because it's going to be fun to go deep with him here. Tim, how are you?
Neil, happy to be on. Thank you for having me.
I'm excited you're here because you've got a unique and very interesting business. So I want to go deep in that. Before we do, maybe just tell me, how in the world did you even step foot into real estate? What was your first entry point?
Oh, well, the first entry point was stories at the dinner table with my dad, who was a broker. Okay. And he was putting together deals in New York City. And so I heard stories about it growing up. And I studied finance in college, and I did an internship in commercial real estate services. I did an internship in finance. And I thought, this isn't my career. I didn't think I was going into real estate investing or brokerage or either one. I worked for tech companies for several years before coming back to real estate because I saw such a big opportunity in real estate tech and specifically in fintech, so financing technology for commercial real estate. And that's what really drew me back in.
Well, it's amazing to me when I talk to people in tech across the board. Tech is kind of like a big umbrella, if you will, and then it gets really granular pretty quick about what people specialize in. But certainly tech has touched every aspect of our lives, no matter what it is that any of us do. So you got experience in tech and decided to bring it back and then apply your skill set ultimately to real estate. So talk to me about that point, about when was that, how you applied it?
Sure. Well, back in about 2015, Neil, I was working for Facebook at the time. Now the company's called Meta, and working in the advertising technology division. So ad tech. I was actually there because I was an employee for a startup that Facebook had acquired. And I was starting to think about what my next move would be. And I had some friends that had left tech companies I was working for previously at Google and at Facebook, and had started fintech startups. So financial technology for consumers to find loans online, and these different financial technology avenues they had taken started making me think about what does the future of money look like, and what is the future of access to money and the way that money flows. Something that I was interested in reading about, talking to these entrepreneurs that had been colleagues of mine at these big advertising technology companies. And while I was interested in learning about that, I got reacquainted a little bit with the real estate industry. I actually showed up to my first real estate tech meetup or small conference in New York City with a couple of friends of mine who were in the real estate industry. And my eyes were really opened to what would be the intersection of fintech and the way money moves with real estate and real estate tech. And it dawned on me that intersection was going to be a big opportunity. And there was a big pain point for real estate investors at the same time that we saw like the rise of Rocket Mortgage, and that rise continued well beyond 2015. They actually fast forward to 2021 and they reached 10% market share for residential mortgage, which is enormous for the thousands and thousands of companies that would like to be your residential mortgage provider. But I saw that if you became a real estate investor, now you don't have a rocket mortgage and you're not walking into your local bank and just talking with some banker. Right. Now you're in this land of relationships and structuring and really access to capital and access to the right financing for real estate investors. To me, was this massive problem. And the only tech companies and startups I saw were attacking the residential side. And I said, well, what about for real estate investors and their access to capital? It's actually a more complex problem. Maybe that's why it's not being solved yet. It's a more complex problem and it's harder to crack to figure out what is my menu of financing options and how do I bring efficiency and transparency to that for real estate investors? And so that's something that became of extreme interest to me.
All right, perfect. So that's 2015. You start building it out. The problem, you had it spot on, is really what does that look like commercial basis? And there is a significant lack of transparency. I know from our standpoint, we get a project and in some cases, I mean, I've got some really good relationships now built over the years, but I remember very early on. And it happens on occasion today. I'll take a project to somebody and they hate the project. They don't want to have anything to do with it. A large of it, they don't want to be in this asset class, whatever that happens to be. Take it somebody else and they love it. You know, it's kind of a head scratcher because grooming out of the residential side where I grew up in is take it any bank. It's all the same, right? It's a piece of real estate. It's a deal and they want it. But the commercial side is a completely different animal.
In residential, there's only a few ultimate sources of capital. Now you can get them through different avenues, but there's only a few ultimate sources of capital with where your loan ends up. And those will be names like Fannie Mae and Freddie Mac and FHA. And they are the ones that actually set the underwriting standards because the government has basically subsidized and sponsored these entities to say, hey, go support and prop up the mortgage industry because we want people to be able to afford houses. Right. Now, that still happens in commercial to a partial degree because in multifamily, often non-recourse refinances will end up with a Fannie Mae or a Freddie Mac or an FHA. But there are many other ultimate sources of capital for commercial. So some of those are private lending pools. And those will be higher costs, typically hard money lenders that are double-digit interest rates or private debt funds that are like high single-digit interest rates, but they're an ultimate pool of capital. They're never securitizing it, or if they are, they're doing a private securitization. Something called a CLO might be like a way to sell bonds on the market that are made up of these commercial mortgages, but it's a different ultimate source of capital than the government subsidized. And then you have all the banks and credit unions across the country, and they are constantly they may be interested in an asset class one day and not interested in the next because they have too much exposure to self-storage or to hotels or to multifamily in that particular county. And they are trying to balance their portfolio. So think of them like investors, a bank that has a couple $2 billion of assets, maybe saying, okay, we want 20 or 30% of our investable assets to be in commercial real estate broadly. And then maybe only 1 or 2% of their assets are ever going to go into a self-storage in that state. And they're doing that balancing, and keeping track of that as an individual investor is impossible. Well, you can have good relationships with a few institutions and that can help you, but you're never going to keep track of the entire market as an individual investor. And that was the opportunity we saw.
No, you're totally right. We ran into a situation about 2 or 3 years ago, I don't recall. A large credit union here in town ran out of money to lend, meaning they hit their limits in terms of what they could do. They literally, in June or July of the year, they stopped lending on the commercial basis. Done. No more for that year. They essentially had to get to deposits, their ratios to a different perspective before they were going to do it again. And you're right. How do you track that? How do you manage that at a big level? And you've identified an opportunity. So what did you do then? And then, bring me current on it.
Sure. So first thing I did was a lot of market discovery. I had informational interviews with everybody I could get my hands on in commercial real estate, lenders and brokers and borrowers, and tried to understand what are the real pain points or what are the things we could fix first, because you can't solve them all. You have limited resources, and to get a company going, you need to solve the things you can solve now and then build on that and gain momentum, right? So as we got enough information to say, hey, here's the start of a business plan. In 2016, I quit my job, and so did my co-founder. So I picked up a co-founder along the way. His name is Nathan. He's a software engineer that was working at Google at the time. And I needed somebody to actually build the tech platform that was going to be the underlying engine to solve these problems. And so he quit his job at Google and I quit my job at Facebook. And we started building a prototype. Now that we have a prototype, we can get the second level of market feedback. Do brokers want this thing? How would we get lenders on this platform? What features do we need to actually make this functional? But we did not hit like immediate success in that. We built prototypes and we built different features, and we were trying to figure out what will be our initial user base. Is it really large commercial real estate investors that have lots of deals and lots of debt to manage? Or is it small commercial real estate investors? They're doing their first couple of deals and they're trying to figure out the process. And so as we were figuring out our business plan, get to the end of 2016 and we're running these pilots and we don't have paid customers yet, we thought we had a fundraise coming together, and the fundraise actually fell through. And an investor that we were counting on to invest in the company fell through. And when I realized that our fundraise was falling through, it was between Thanksgiving and Christmas of 2016. And we have no more capital beyond the first week of January. And so we needed to make a decision. Are we going to keep building this prototype and try to actually launch our business plan and get paid customers? Or are we going to give up on this thing? Not that we don't think there's an opportunity, but we haven't gotten there yet. And so this is one of our real grit moments in that I was actually able to convince Nathan and a second software engineer that had joined his team, hey, let's work on this together for the next few months where nobody gets paid, get to a launch date, see what we can drum up as far as investment and traction launching this thing and what we can learn from it, and see if it's become a viable business model. So that was something that for the early part of 2017, these guys actually stuck with me. Nobody got paid, and we got to our launch date.
So funding got lost in late 16, and then you're at a point. You got a burn rate going through cash and no revenue coming in and no lifeblood of an investor at that point in time. Were you guys,
right?
And how deep were you? Were you out of cash?
By the time we got to, and the reason we had a specific launch date is because we actually had won a contest in like a real estate tech pitch competition, where the contest and winning it meant that we got to pitch on a world stage of a real estate tech pitch competition in March of 2017. We couldn't even both go because we couldn't afford 2 plane tickets. We were using our last cash to have one of us go. So I was the one who went because I was the one to pitch the business on the business side. Nathan had to stay home because we didn't have money for a second plane ticket to Europe, where this world stage was, to pitch in this real estate tech competition. So that's about how deep we were.
Incredible. All right. So you get to the world stage in March then of 17, you pitch, what happens?
Nothing immediately. There was no silver enshrined trophy and stage and angel investors throwing money at us and customers. Nothing, except we got one of the real estate tech publications that was there and in attendance to write an article about our pitch and about what we were trying to bring to the industry. And we cobbled together a little bit of our own marketing and calling customers and letting them know that we were launched, that we got a bunch of real estate investors to try us out in the few weeks following the launch. And while the platform still wasn't fully functional and it wasn't perfect, getting a few customers to use the platform and give us feedback, we then brought that feedback back to some other angel investors that finally wrote us some checks, not the big investor that pulled out in the end of 2016, but we got some smaller investors to write some smaller checks that kept the lights on for the next few months, because we showed them, hey, we're starting to generate some pipeline where there's going to be revenue by this summer.
So it kind of sounds to me like you got a feedback loop, you got some money and a more feedback loop, and then you find your product, your service as you went. And then at some point we're able to get some, play, because we're here years later, you got customers and some bigger checks, I suspect, from investors.
We did. So 2017, we got some checks from investors, small scale, but we also started to drip in the revenue. And that was a really important milestone. When you're a tech startup and a fintech startup, sometimes if you have a big investor in your pocket or VCs, you can go a long time without having to get to that revenue.
That's right.
For us, we didn't have that luxury. We had to get to revenue as fast as we could at that point. And we did so. And we started learning, okay, what are all the things that are blocking us from making more of this happen? What are all the things that are blocking new customers from working with us? And as we started to learn those lessons, and really the way we went about it is, how much can we automate in finding the best commercial mortgage financing? And where do we need to fill back in the gaps with the human support? And as we figured out what are the gaps, not, hey, we're going to start with the service and build tech where we think it's needed. We're just going to build tech only tech. And then where do we need to add back in the human gaps? We started hiring capital advisors, and those two things started adding and becoming a virtuous cycle of, we're adding service with these expert, real estate financiers that are joining us as capital advisors. And now we're adding the features that are missing. And now we're adding the people that are missing, and back and forth. That led to the virtuous cycle where our revenue started to increase. You fast forward a few years now, and we're talking in the summer of 2022, we're actually about to pass $1 billion financed on the platform.
Incredible.
And we have multiple $1 billion in the pipeline of loans now. Dude. And so we've grown and tripled a couple of years in a row, and you triple enough times, you reach numbers like $1 billion of loans. And we hope to keep it going for as long as possible. We realize that there are a few key value propositions about finding the best financing easily that we're just trying to continue to whittle and refine. And that's the entire calling of our business.
What an amazing story and an amazing journey for you personally and professionally, because I can only imagine you're married, you've got kids, right?
We had our second child in the throes of not having money, as a matter of fact, which is not what I would recommend to any entrepreneur, by the way.
No, I could only imagine that. You're in current and you just at an incredible spot in a tremendous run where you're at. Boil it down. I'm a commercial investor. Tim, what is it that Property Stack does and how does it help me as a commercial investor?
Yeah. So StackSource does a couple of things for commercial real estate investors. One is...
Hey, thanks for correcting me. I call it Property Stack. It's StackSource.
Oh, you're good.
It's a source of stacking capital. Thank you.
Yeah, exactly. It's a source of your capital stack. And first thing is you can get instantly matched to different lenders based on giving us some really basic information about your deal. So tell us the address, and is it an acquisition? Is it a new development or refinance? What are the metrics of the deal today? What's the current NOI? What's the cap? You give us some of the basics, and you instantly get matched to financing sources. Now, I'm even going to correct myself here. I just said instantly matched to lenders. We've actually started to close some deals now this year. And a new expansion for us is that we've closed deals where the borrower has used multiple financing sources on the same deal that they found through StackSource. So we recently closed a couple of deals in Texas multifamily where we brought a senior lender and a preferred equity source to the borrower through our portal. And they closed with both of them and they got 87, 90% LTC because we were able to bring multiple pieces of the capital stack to the table. But the first thing is instantly see, is there a market to finance your asset? Because you can talk to a few banks and credit unions yourself. You may or may not be talking to the right ones or the most competitive or the lowest rate, but to see, hey, here's the market. And to see the full market of capital for your particular asset is one of our superpowers, right? And we do that through continuously keeping track of the investment and lending appetites of these now 1,000 plus capital sources. The second thing is really the execution of the process, right? And we've automated the building of a debt offering memorandum and the way to go out to market to increase engagement from capital sources to make the process really transparent and efficient. So the capital sources themselves is one superpower, and then the process is the other. And we continue to refine on those two themes.
It sounds to me like probably the bread and butter, is it fair to say, is the debt side of the equation?
Absolutely.
And then it sounds like you've got an equity component to it. It's probably the cherry on the top for the right situations.
That's right. Yeah. And unfortunately, we can't do the equity sourcing piece for small commercial deals. Right. So really getting into like the $10 million to $75 million space, which is where we can start to become useful. Because what we don't do is we don't crowdfund, right? Like we're not showing you, hey, here are 10,000 passive investors. There are actually other real estate fintech companies that have done that and have set up, hey, we have 10, 20,000 individuals that might invest in your deal.
Right.
That's not what StackSource does. We have institutional sources of equity that might start writing checks at $5 million or family offices that are looking for very particular deals. So we will do the equity and structured financing piece kind of for the larger projects.
Yeah. The type of deal investor with a project, let's say on the smaller side, 0 to, $1 million to $10 million. So what does that look like? What kind of deals are they asset class wise, or maybe, size wise should they be? Who's the preferred target from an investor standpoint?
Yeah. If you're in the small space, let's just call it 5 million and below, and it could even be less than $1 million. We can certainly do senior debt placement. There's probably a lowered limit, maybe like less than $500,000 or $250,000. At that point, we're going to charge a minimum fee just to, do the work of bringing you out to market and negotiating. And at a certain point, it becomes uneconomical and you should just talk to a local bank. If you're working on such a local deal, it's 1 unit of residential over 1 unit of retail in a tertiary market, and the loan you need is $150,000. Could we get you a better interest rate? I guarantee we could. And I also guarantee it wouldn't be worth it because, to work with us through this process, you might as well just take the one bank that's willing to work with you already, if it's such a small deal. But if you're talking $750,000 or a $4 million loan, now it's worth it to clear the market and make sure, is there a better interest rate, lower fee structure, higher leverage? And we can certainly do senior debt placement. Every town across America has apartment complexes,
Yep.
local retail centers, local self-storage, medical offices. And all of these things need a commercial mortgage if you're going to finance them. And you're not going to get that through your regular local residential mortgage advisor. And that's where we can certainly help on the senior debt piece and say, hey, here's 11 matched lenders that are all able to quote you on this deal rather than going with one or two quotes that you can get on your own. So in the small debt space, it's really just that reach and knowing really quickly and really easily, hey, could I get several quotes at once rather than relying on one or two people I'm talking to?
Yeah. So I got a $2 million deal. I bring it to you guys. I go through probably a handful of questions on the platform. I suspect provide information relative to the deal. And, what's that process from a timing look like for me to submit some information, for me to get, some feedback or direction on it?
Yeah. Well, there are a couple of scenarios where we can provide an instant quote. So those would be like a Freddie Mac small balance loan program. So a multifamily that is stabilized, 90% plus occupancy, and the income is solid. We can give an instant quote for loans from $1 million to $6 million on the debt side.
It's fair to say because it fits in a box. If Fannie Freddie, just like a single family home would, that's right, do an instant approval because it fits in this box with standard underwriting guidelines.
That's right. Yeah. So it ultimately gets securitized through Freddie Mac if you move forward. And we're adding more instant loan quote scenarios as we go. So there will be more next year than we have this year. But if it doesn't fit the instant quote box, and even if it does, and you want to get quotes from other lenders that don't provide an instant quote, you immediately see who you're matched to. And that should give you enough information to say, okay, well, based on the range of interest rates or the range of leverage, I do want to move forward and get quotes from these other capital sources. That's where we need to collect the actual underwriting detail that would go through our analyst team. If we have all the information on day one, that thing goes out to market. It's actually reviewed by credit people at these different lending institutions, sure. And you're getting quotes back in the next few days.
Yeah. How do you guys end up getting paid?
So we get paid only if we succeed in finding great financing for the deal, and we get paid at closing out of the escrow. For senior debt, for small debt deals, it's typically a 1% origination fee. And, for larger, more complex capital stacks, it might be a little bit different of a structure where we'll actually charge more than that on closing day for like equity placement or for subordinate financing, but usually 1% or even less than 1% on the senior debt for larger projects.
Yeah, dude, I love your model and your ability to solve really a complex problem. You and I were talking about this before we rolled live. I said, we got a kick butt lender in Iowa, a couple of really do a bang up job. But as soon as you cross a border.
Yeah. Sometimes county lines, if you're dealing with like banks and credit unions. And again, even if it's not technically out of their footprint or they off balance for some of these. And so the further you get out of comfort zone and into new lines of different types, lines geographically, lines of different asset types or different deal sizes, all of these things can mean you are or are not a good fit for some other lending institution you may or may not know yet.
No, incredible. Well, I think what you've done is solved a very complex problem. But let's do this. I want to move on to the final segment, what I call for impact. Your favorite quote. I just want to be right. I don't care if the answer comes from me. Ray Dalio said it. What about that resonates most with you?
I try to cultivate in myself and my team this growth mindset, and also not a mindset of I need to be the person that gets credit for this decision or for this coming up with this idea. At the end of the day, we want our company to be great. We want our service to our clients to be great, not just to be what we would have come up with. But if we can really steal ideas from people that are advising us, from our colleagues, from other businesses that have done things in parallel spaces, that's what's going to make our company great. And honestly, that's, I think, the right way to make decisions is take what is the very best outcome, not the one that you would hold on to as something you get credit for.
Yeah, I couldn't agree with you more there. That is spoken like a true business person who wants the absolute best for their company. And then ultimately that means for their people. What do you think holds most investors back from hitting their personal next level?
Well, you need to keep learning and you need to keep growing, but there comes a certain point too, where you realize I'm not going to know everything and I'm not going to know everyone. And then it becomes about putting together your team, right? So your team can be a mix of vendors and service providers and different professionals that are going to work with you on transactions or on projects. But then ultimately it has to become a team that you have a core team that you work with on everything, that has, who is it in your life that has a right and has enough information to call you out on strategy and call you out on decision making. That comes down to a core team. So at a certain point, you can execute to a point on your own. Beyond that, you then need to start to put together an external team. And then at a certain point, you need to start putting together an internal team. So I think, for people to think about, hey, it's just me right now, I'm gaining information. That's stage one as being a real estate investor. Stage two would be putting together that external team and starting to let go of like, hey, I need to do everything and I'm going to get some people. And then stage three would be, okay, now I need a core team where it can go beyond my own capabilities.
Yeah. That reminds me, you want to fast, go alone. You want to go far, go together.
Yeah, another great quote.
Yeah. Outside of real estate, what are you most passionate about?
Still love technology, still love learning about like what the future is going to look like with software and these, supercomputers in our pockets or all the different technologies that are going to impact our lives. But the biggest thing I spend time on outside of work and my huge passion. So those 2 kids are now up to 4 kids. And so I have 4 little kids running around at home, spending time with them, not missing their childhood years is something I'm super passionate about as well.
Yeah, no, that's great. What's your favorite way to make an impact in the community?
So I'm a very active member of my church, and I'm actually also a very active member of a CEO forum group that I spend every day, every month, not going to work and not working on StackSource, but instead with 12 other CEOs, we get together at a table and we talk about like what's impacting each of our businesses. And so I actually love getting together with people in other businesses that are business leaders beyond just my own, trading notes. That's actually a faith-based group as well. So it like overlaps with like where I want to be involved, like my faith community. And so that's another passion of mine.
Hey, we just launched the Real Grit Vault. It's the vault filled with resources for investors, valuable resources that people can use and apply to their own business. I know you brought a contribution to the vault today. Maybe tell our listeners a little about what it is.
So we have a couple of spreadsheets that we're going to throw into your vault, Neil. One is an underwriting template that anybody specifically focused on multifamily. You can get really, really fancy on multifamily underwriting models. You can also do back of napkin. This is the fancier side, but still like a free resource, not a software, just a spreadsheet template that if you're getting going in multifamily, anybody here can use and understands the different drivers of NOI and value for multifamily. And we'll throw a second in there, which is a schedule of real estate owned template. As you start to build a portfolio as a real estate investor, residential, multifamily, commercial, all of it can go all onto the spreadsheet. It's something that will speed up the process. If you never use an intermediary and you never use a StackSource and you want to run your own really efficient financing process, this spreadsheet can still help. Hey, here's my portfolio. Here's where I have income. Here's where I have loans. And here's a personal financial statement all in one package. It will make your financing process and your process of dealing with capital sources of many flavors far more efficient to have your portfolio organized this way. So I think those are the 2 things that we'd love to throw into your vault.
Tremendous contribution to the vault there. I appreciate that, Tim. For anybody who wants to get a copy of those, it's www.realgrit.com/vault. Tim, I sincerely appreciate you taking the time to connect up here. It's an amazing personal story about what you had to go through to be able to get StackSource to the point where you closed $1 billion in loans and multiple billions in the pipeline, which is it's mind blowing, I would imagine, given thinking back 5-6 years ago where you guys actually accomplished together.
It's been a journey. It's been an absolute journey. Now to be at 35 people rather than those 3 that were all broke has been quite the journey.
Yeah, tremendous contribution from your standpoint to make ridiculous impact in their lives. For people who want to connect with you, they want to learn more about you, they want to find StackSource, where can they go? What should they do?
Sure. StackSource.com if you'd like to get in touch with our team. My email address is tim@stacksource.com. I'm very active on LinkedIn, so feel free, if you're a listener, to connect with me on LinkedIn. If you Google Tim Milazzo, I'm the first one that comes up. You'll probably find me on LinkedIn and the StackSource website, so feel free to connect with me there.
Perfect. We'll make sure we get all those links, including the LinkedIn link, in the show notes below for anybody as a quick source to be able to get there and connect with Tim. Thanks for your time, Tim. I appreciate it.
Awesome. Thank you, Neil.
You bet. For everybody here at Real Grit, I'm Neil Timmins, reminding you that real estate requires real grit. See you next time. What if I told you can make 20 times the return of a single family fix and flip on your next big deal? Well, it's actually possible. It's possible inside the world of commercial real estate. Say, I'm inviting you to this free challenge. It starts August 15th. It's totally free. It's a 5-day challenge where I'm going to take you and deep dive into the world of commercial real estate, more specifically capital multiplier properties, what that is, how we identify them. I'm going to show you how to identify them, how to evaluate them, and how to lock them up risk-free. I'm going to give you all the paperwork to do it. It's totally free. You can sign up to join us at www.20xprofitchallenge.com/real grit. That's www.20xprofitchallenge.com/real grit. And I'll see you in the challenge. If you like our content and want more, you can access it at realgritpodcast.com. You hear it guest after guest. Instinctively, you already know it. But let me call it out. The most expensive action is inaction. The real estate market is full of opportunities. You just need to uncover them. You can build a business that lasts for years, makes monumental impact in the lives of those that you love. It's not just about business, but about the freedom you get because of it. Have you ever heard the saying, if you want to go fast, go alone. If you want to go far, go together. I believe that partnering is essential. In fact, I partner with hardworking investors all the time. The point is that you can get a lot further with the right partner. Let me say it again, the right partner. If you've ever thought about partnering with anyone, or if you have a partner now, I encourage you to download my free Partner and Profit Guide, which includes the top 5 must-answer questions to evaluate a profitable partnership. You can find it at www.legacyimpactpartners.com. I'll see you in the next episode.